Hello and welcome to this weekly technical update in the cooperation with Coherent. My name is 𝗵𝗵𝗿𝗺𝗺𝗀. I'm a technical analyst, and amongst other things, I'm also a product manager managing projects and products. Uh, but I'm doing this technical video on a weekly basis with Coherent, and it is an educational video. There's no advice or recommendation whatsoever intended during this. It's purely to try to educate you how you can use charts in your decision making when you are trading and investing. And I'm using technical analysis purely. Let's get cracking on this one. We start with NASDAQ 100. NASDAQ 100 closed Friday, had a good day Friday, closed above 19,234. So it actually it did establish a bullish trend, but it wasn't confirmed because the RSI, as you can see here, it's circled here. RSI, the relative strength indicator, it's a indicator of the trend, of the strength of the trend, and it needs to close back above 60 threshold, the red line here, to actually confirm a bullish trend. So let's see if it can actually do that. If its RSI is being rejected at 60 threshold, well, then we could see the index coming back under pressure. And we still have this dead cross here where the 55 moving average broke below and closed below the 200. So it will still give it pressure to the downside, and all moving averages are still declining. So let's see if we can actually get the index higher. If we can get the RSI to close back above 60 threshold, well, then there is potential up to 20,290 maybe, where we have some stronger resistance also in this area here. If it's being rejected, and if NASDAQ 100 closes back below 19,234, then we could see downtrend resuming, and the move back below 18,500 will probably accelerate that. Moving on to S&P 500. S&P 500 closed above the 5,522 resistance, and that also meant that it closed the gap, that little gap we saw here between the bodies. We don't count the shadows, or the wicks, as they also call these here on the candle. We're only counting the body. The body is most interesting, actually. Also here, RSI is not up there to test the 60 threshold, and that will be key here the next couple of days. If the relative strength index can close above 60 threshold, well, then there could be further upside potential where we have some stronger resistance up here in the region around 5,700 and especially 5,784, where we also have this doji evening star top and reversal pattern. It needs to be cancelled. If that's being cancelled, then I think we'll go into a full-blown bullish trend, resuming the bullish mode that we saw the past year or so. So that would be key. We still have this dead cross also to deal with, where the 55 moving average also here they move below the 200. So it will weigh on the index, so we'll need to keep an eye on that. However, if RSI is being rejected, can't get back above 60 threshold, and start sliding lower, with the market sliding back below 5,492, then downtrend could resume. Let's have a look at one of the key components of those two indices, Apple. Apple has had a very strong bounce also. Friday testing 209.68 resistance, which is key, but there could be key up here 212.94, because RSI also here still below 60 threshold. However, if Apple does close above 212.94, then I also think we will have the RSI closing above 60 threshold, and that could pave the way to higher levels towards 225, where we have some stronger resistance here in this region here, where we have the 200 moving average coming down, we have the 100 moving average coming down, and we also had a dead crossover here between the 55 and 200. So there's still something dragging or weighing on the indices and some of the key components for sure in this case. If Apple fails to play out this scenario of closing above these two resistance levels, it could resume downtrend, sliding back below the 200, and then we have a key support here at 189.80. Tesla, we also have to talk about Tesla. Tesla, of course, it had a very good day Friday, up about 10% or so. But it is still in a bearish trend. It needs to close above 291.85 to establish a bullish trend, and RSI needs to close above a 60 threshold to confirm that bullish trend. That could give potential up to around 325 resistance, where we then will have the 100 moving average coming down, kind of putting a lid on it. So that will be key here towards the next couple of days. Can it actually close above 291.85, and can RSI close above 60 threshold, or will be rejected? If it's being rejected on both accounts, well, downtrend could resume. Finally, of course, we have to talk about gold, because everybody's talking about gold, and that is a little bit of an interesting development, both on the daily and the weekly chart. So this morning, the 38.2 retracement here at 3,292 is being tested once again. And I think I will just draw a little bit of a horizontal line, and you can do that too. 3,260. If it takes out that, I don't think you need a close below. If it takes out that, then I think we'll see a sell-off down to support here at 3,165 area, where we also had this 61.8 retracement of this bullish move here. So we are in for a correction phase, or we are in a correction phase. We're in for a correction move, it seems. And if that plays out, and that is where I want you to look at the weekly chart, we have this, what I would call a shooting star. Market pushed higher and then collapsed and closed more or less unchanged on the week. If we do get a negative candle or negative week this week, well, then we could be in for a much rougher downside, and possibly lower than 3,165. But let's talk about that maybe next week. But that is a top and reversal pattern in the making at the moment. And RSI, there is divergence. The RSI on the weekly here is lower than over here, but market was higher, or price was higher on the actual gold spot, and that is an indication of a trend exhaustion. So let's see about that, if it actually will play out or not. However, if gold starts moving back above the 3,371, then it could try to push for a new high and at least test the previous peak here at 3,500. So those are key levels to watch out for the next few days and the next week or so. So let's see about that. All right, that's all for this week. Have a nice day and a nice week, and check out your charts. Thank you very much.